Welcome to the Accountancy Learning AAT sample paper walkthroughs. This video will be on the Level 3 Financial Accounting Sample Paper 2 Task 1, which is about using daybooks and accounting for and monitoring non-current assets. So first of all then, Part A asks us to identify whether the statements are true or false. So Statement 1, an advantage of using a daybook in a manual system is that all errors will be eliminated. So this is talking about all errors. So this is false. It's not possible to eliminate the risk of errors being made. An advantage of using a daybook in a manual system is that transactions are summarised prior to being entered into the general ledger. So this is true. So if we take our purchases daybook, for example, we would take the total amount and transfer that to the payables ledger control account, the net amount to our purchases account, and our VAT amount to our VAT account. We don't put all of the individual transactions into the general ledger. We just take those totals from the daybook. One purpose of the non-current asset register is to assist in physical verification of assets. So this is true. When we've got that non-current asset register, we can go around and check that physically we have all of those assets that are listed on the register still within the business. Now Part B asks us to complete the following statement. For a VAT registered business, the total column in the discounts allowed daybook is recorded in the, and then we've got some options to choose from. So this is our discounts allowed, and we're looking at the total column. So this is how much we are allowing our customers a discount. So if we're talking about our customers, then we're going to be working in our receivables ledger control account, and that would mean the total is the amount that they no longer owe. So it reduces that overall balance. Part C. Identify which one of the following is not a reason to obtain authorization for the purchase of high-value non-current assets. So to ensure that funding is in place for the expenditure, to ensure that the spending is aligned to the long-term plans of the business, and to comply with accounting regulations. So to get authorization, it means that we are going to be checked that there is funding in place for it. So are we actually expecting to buy this? Have we budgeted for it? Is that spending aligned to the long-term plans of the business? Do we know that actually what we're buying is going to help us, or we believe it's going to help us increase our revenue going forwards? So both of the top two are reasons, and the bottom one, to comply with accounting regulations, is not a reason. It's not about the accounting regulations or rules of any sort. Going on to Part D, we've got another statement here to complete. The depreciable amount of an asset is the cost of, and then we've got three options. So we're looking at the depreciable amount. So that is what we can apply the depreciation percentage to. So it is going to be the cost of the asset, but it's also going to take into account any residual value that we believe there'll be at the end of its useful life. So the depreciable amount is the asset less its residual value. Nancy Jones is a sole trader. You are working on her accounts for the year ending the 31st of March 20x8. VAT can be ignored for this question. On the 1st of March 20x8, the business received an invoice for a TUL 2000 machine, an extract of which is shown below. And you can see there that we've got some costs relating to this machine. We're also told that James, who works in Nancy's business, spent 15 hours installing the machine. and he's paid £25 per hour. So for the first part of Part E, we need to calculate the amount that should be recorded as the capital cost of the TUL 2000 machine, and we need to show our answer to the nearest whole pound. So we're looking for what will be the capital cost. So what are we going to include? So we're going to definitely take the cost of the machine in the first place. And remember, the capital cost is going to be anything that gets that machine to its location and working condition. We can include the delivery charge because without it, we wouldn't get the machine to the location that it's needed. But we cannot include the maintenance contract because this will be something that goes in our revenue expenditure. That is to maintain the machine over the course of so many years. The other thing we need to think about though is James and what he's done. So he's spent 15 hours installing the machine. So without that installation, we wouldn't be able to use the machine. So we have to include his costs. So 15 hours multiplied by £25 per hour equals £375. So that's how much it's cost for James to install that machine. So our total capital cost then is going to be the 375, and we're going to add that to the 12,000 and the £100 from the invoice extract to give us a total of £12,475. So let's move on then to the next part of the question. So on 28th of February 20x8, Nancy sold a business van, TA54 VLC, and the business received £5,000 as a bank transfer. We're then told about the depreciation policies. So depreciation is to be charged a full year in the year of acquisition, but none in the year of disposal. Machinery is 20% on the straight line method with a residual value of 5%. And vehicles are to be depreciated at 25%, but on the diminishing balance method with no residual value. So we've got a couple of different policies here. So we'll need to take that into account a little bit later. So we now need to complete the non-current asset register. So we need to enter the acquisition of the TUL 2000 machine, the disposal of the van, and record all of the depreciation entries as well. We should be showing all of our answers to 2 decimal places, and then we've got a date format to follow with the years as well. And if we've got any 0 answers, then we need to enter 0.00. So let's go through them. So first of all, we can just work through the boxes as they appear really. So the machinery, we've got year-end depreciation to put through for the first machine, the SHRS 1000. Now we know the machinery is on a straight line basis, and so because it's already been depreciated, we know what the depreciation will be because it will be the same each year until the end of its useful life. Our carrying amount will be the £6,014 less the depreciation, £4,171 as the carrying amount at the end of the year for that machine. Next, we've got the new machine that we need to enter. So we need to take the acquisition cost, which we worked out in the earlier part of the question. So 475, not forgetting our 2 decimal places there. And now we need to work out what the depreciation will be. So again, we're on a straight line basis, but remember we have got the residual value of 5%. So to work this out, we'll take 12,475 and we're going to multiply that by 95%, which would give us the amount less the residual value. And then we can then times that figure by our 20%, which is going to give us our depreciation value of 2,370.25. And remember, we are applying the full year's depreciation because it is in the year of acquisition. Now let's work out our carrying amount. So what is the cost less the depreciation charge, which is £10,104.75p. So we've completed the machinery section of our non-current asset register. So now let's move down to vehicles. So the first vehicle we've got is the one that has been disposed of. So first of all, we aren't going to apply any depreciation in the year of disposal. The information in the question tells us that. And we're also told that we must enter 0.00 when we're going to put a 0 as our answer. So for the depreciation charges, we are going to show it at 0.00. Now the carrying amount, that's also going to be 0 because we've now disposed of the asset. We've disposed of that car, that van. So again, it's 0.00 because it's been disposed of. We know that the disposal proceeds were £5,000. And at the very start of the question, it told us it was on the 28th of February, X8. And remember, we're following that format that we're given to make sure that we get the marks in the question. So next then we need to do the final car, which is the diminishing balance method at 25%. So we're going to be applying that to the carrying amount. So it's going to be 14,700 multiplied by the 25% to give us £3,675 depreciation. And then we need to work out the carrying amount, which is the previous carrying amount, take off the depreciation, which is £11,025, 0.00 to 2 decimal places. So now we need to complete the disposal account for the disposal of the vehicle, showing the amount to be transferred to the statement of profit or loss. And again, we need to work to 2 decimal places. So we're creating a disposal account. So the first thing when we dispose of an asset is we need to remove it from the cost account. So it would be sitting as a debit in the vehicles at cost account. So we'll credit vehicles at cost and we would debit the disposal account. Now we're taking the original value of the vehicle, which was 27,000, which would be in the question. So that's removed the vehicle from the asset account. We now need to take out the accumulated depreciation that has built on that van or on the car. So that would be sitting as a credit in the accumulated depreciation account. So we would debit accumulated depreciation and credit disposal. So there's where our double entry is going to be. And we're going to then put in 11,812.50 as our accumulated depreciation. We also need to put in here the bank figure because we got some proceeds for the sale. So we would have debited the bank and therefore we credit the disposals account. And now in the exam, the totals would have already come up, would have been added in as you went along. So to balance it off, what will be our transfer to the statement of profit or loss, we want both sides to equal 27,000. So we need to put in the credit. So remember when you're doing these disposals account, we have to transfer it over to the statement of profit or loss at the end of the financial period. So our final transfer would be £10,187.50p. Then the final part of this task is to complete a journal for the depreciation charge for fixtures and fittings. So this time we're literally just putting the journal in. We are given the depreciation amount. So depreciation is an expense to the business. So it will be your depreciation expense account. An expense is a debit. So we can put in our 4,830.70 there. And the credit side of it will be the accumulated depreciation. So you would have a fixtures and fittings accumulated depreciation account, which will then be the credit, which balances our journal. So with that then, that is the end of task 1.